This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
I'm bringing out the entire bottle of Patron.
They're all exactly the same.
Crypto art, and then what it really is an NFT.
Wow.
Eddie wants to slap the bag.
So this is the next best thing.
DeFi is going to be a bubble.
It's provably scarce.
With Mad Dog.
Crypto, gold, and silver.
Transparent substance.
Take my money, start a war with it.
Without further ado.
Cheers to you, brother.
Get shit done.
Because the system has to collapse before that.
My Corona.
Cheers. I feel much better now.
Cheers.
Wow, that was heavy. What's going on, Blockchain and Booze Nation? Session 54, 54 weeks straight. Every single week reminds me of another week in quarantine. So I don't know if that's good or a bad thing. But aside from us being in lockdown, or at least a lot of us, I don't know what's going on in Miami. I see punks everywhere and a bunch of people going crazy. But here we are, session 54. I'm Adam Levy, host of Blockchain and Booze. I'm the ops manager at Draper Goren Holm, and we got this fun thing that we do every single Tuesday evening where we sit down, we talk crypto and drink some booze with some of the top people in the space that are pushing it forward. And we got a really, really cool session planned for us today. Some of my favorite builders, personally, favorite communities, and let's just bring him on stage right now. We got Antonio from DYDX, Stani from AAVE, and Jack from SKALE. What's going on, guys? Welcome to Blockchain and Booze.
Hey, thanks for having us.
Yeah, I need more energy. I need more energy. Yeah, there we go.
Oh, we gotta drink more first, right?
We gotta drink more. Cheers, Stani. What are you drinking? Oh my god. Oh my god, dude, you need to upgrade. Question: Do you drink in general, Stani?
Of course, man.
So what's going on? It's just on my show that you're not drinking. All right.
I don't know. I usually don't have anything after weekends. You know, that's my my problem.
All right. Fair.
We're going to do a Friday night one, Adam. Friday night Blockchain and Booze.
I know. You know what I've been wanting to do? Because Blockchain and Booze just takes place once a week, and there's a lot of shit that happens in crypto every single week. It's not 1 hour is not enough to dive deep and drink over it. So I've been thinking of doing like a Blockchain and Booze after hours kind of thing on Clubhouse or whatnot, but to be determined. But anyways, I want to go down the line. Antonio, Jack, Stani, what are you guys drinking? Antonio, we'll start with you.
I am drinking a whiskey sour that I made
Nice.
just previous.
All right, cheers, Jack.
I'm drinking a bourbon. Weller.
Oof, the entire bottle. I don't know, Stani. Nice.
Small portions, but
Stani, I don't know if you need an intro. We got you on water last time, and now you're drinking Diet Coke. I can't believe you keep doing this to me.
I mean, it's a substance in a
Right.
in a can. Yeah, silver can.
Nice. Well, anybody that's watching Blockchain and Booze for the first time, we are live on Cointelegraph. So shout out to our media partner over there, and shout out to Blockchain Radio. If you want to join the conversation live before we get started, go to meet.blockchainbooze.io, and there you can interact with everybody that's watching live on a chat basis, hang out, drink with others. It's going to be a lot of fun. So guys, let's dive right in. Today we're talking all things gas fees, scalability, layer 2, and competing blockchains. And this is one that I'm particularly excited about, but also scared about, because you can get super technical with this stuff and into the nitty gritty. And I want to avoid that. I want to talk more high level stuff and kind of pick each of your brains on the different solutions that you guys are approaching, on the different projects that you're working on, and kind of go from there. But to kick things off, right, we have this big question here, right? And this is something, I guess, like when I talk to my family about crypto, and I try to get them to buy NFTs, and they look at me like I'm a psychopath because they need to pay that initiation fee on Ethereum just to interact on OpenSea or Mintable or whatever. And with gas fees high, it's insane. I remember I was showing someone yesterday and I got hit with $150 just to interact, not listing anything, not buying anything, just interact. Okay. So we need to get into a point of age where I'm paying the least gas fees. I have transactions confirmed instantly, but how can I do this all while remaining an ETH head and being very confident about what's to come? Like, what do you guys tell people? Like, they tell you, okay, why do I need to spend $200, $300, $50 on these gas fees? What's like your response to that?
I mean, I can take first cut here and say, hey, I think it's amazing what we can do today. If you think about the gas fees you pay, you actually realize you're paying into the security of not having a centralized middleman. And so where we are, I think it's pretty amazing, even with the gas fees where they are, but it's not going to get us to the point where average everyday users are using blockchain and using Ethereum. So I do think that we've got to like give ourselves a little bit of a break for where we are in this cycle and this process, but it's got to go away. We've got to improve. And I think there's a lot of great things underway. And I think, we're going to get there. And I worked in mobile in 2005. And let me tell you, it was way worse. Like if you would have told someone in mobile that there were going to be like 100 million people playing each other simultaneously in video games, they would have told you were crazy, as, people saying, oh, we don't need banks to have, hundreds of billions of dollars, exchange hands in a day. So.
All right. Anybody else want to tackle that?
Well, since you took that side of the coin, and I agree with you for the most part, I'll take the other side, which is even for us kind of at DYDX, and we're basically focused on one of the most complicated things you can do in crypto, which is trading derivatives. It's become a massive problem. Like who's going to use an exchange where you have to pay like hundreds of dollars in fees to make a single trade? Our users are like really feeling that pain. So we felt like we really had to solve it. And the thing we did to kind of try to address it is we just partnered with Starkware. Actually, just earlier today, we launched our product with Starkware in production to everyone. So excited about that. Happy to dive more into that. But I think like TLDR, like it's a really important problem and something that we need to solve for the sake of our users sooner rather than later.
Yeah, and congratulations on that. I saw the recent announcement of you migrating and partnering with them, and also the new launch today. So congrats to you and your entire team. And Stani, what do you kind of tell people like newbies that want to get into crypto, that want to buy their first NFT, why they need to pay this gas fee? Like how does it make sense to them?
Yeah, I mean, this is quite. I definitely agree. Like, what blockchain pretty much does is provide security, but the kind of challenge is that the security we have in the layer 1 in Ethereum is quite high at the moment for executing everything we're doing now. And the issue here is that it isn't going to go away. The issue is actually going to escalate, in the sense that the more there is transactioning, the more there is actually a demand for the block space on layer 1. We're going to have these issues with the transaction fees and the cost. And what's kind of fascinating here is that if you think about, like, go back a bit in the history and see what Ethereum as an ecosystem is, and as technology, it allows to create different kinds of smart contract based services, protocols, and that can be, for example, governance tokens, NFTs, and we just have this ecosystem and technology that allows to do many things that wasn't possible before, and applying very high security to bring legitimacy and certainty that kind of like we have this infrastructure, and it's very difficult to arbitrarily go and change it on a network level. So like this security is a paramount for everything we have. Now the thing is that as an ecosystem, being able to do interoperable transactions. I mean, anyone now could create a product on top of decentralized financial protocols like DYDX and AAVE. For example, if you want to aggregate flash borrowing liquidity And this kind of like demand for innovation and demand for execution will just like continue increase the issue here. And I think the way to escape it and is definitely like split the security. So you don't need to like transact everything on the layer 1, but you could just use the layer 1 as a way where you store data and the state of transactions. Pretty much what actually the YDX is doing now, and it's actually a very amazing update, Antonio. But I would say like for a friend, for like my dad, who is paying that gas to kind of like buy an NFT and is like complaining to me about that, I would just kind of suggest to also look at the other options. I mean, there's ecosystem growing in places, not just the layer 1, and you don't necessarily probably need in the future to interact directly with the layer 1s. You could use pretty much even like centralized providers who are then settling their transactions in batches in the layer 1, or using other technologies, whether it's like ZK or optimistic rollups or just some sort of like a side chain solution. And it's a bad position now, because kind of like you can't say to your friend that go and buy that NFT from let's say Matic or somewhere else where it doesn't exist at the moment. So it's not optimal, but there are a lot of people working on this scalability.
So would you say your dad is a DeFi degen? Is that what you're trying to tell us? Does he ape into a lot of stuff?
Yeah, well, the thing is that kind of like he can't ape in so many things, because he has trouble of using DeFi in general. You have to kind of like show him by hand anyways, and he's not like the most technical person on earth. But I mean, simple things. I mean, yeah, he apes.
Nice. No, I love it. I just got my dad into crypto, and he was giving me shit for the longest time. He's telling me I'm playing with internet funny money and that it makes no sense. And then how can you just create value out of thin air? And I'm just like, well, our whole entire system is created through value out of thin air. And now he has bags of Chainlink, of Litecoin, of AAVE, of all these different tokens that he's accumulating himself. But back to the conversation, Stani, you started talking about different elements of layer 2, and Antonio, you also touched upon it. But I wanna zoom out for a second, right? There's been a lot of discussion lately on layer 2 with the launch of ETH 2.0 and phase 0 coming into place. I want to get from each of your perspectives, and again, we can start with Jack, we can work from Antonio, go to Stani. What's the goal of L2? Like, why implement such a solution? And I know we just talked about high gas fees, but does it extend beyond that?
Yeah, and I think there's a lot of different approaches, and I think there's different approaches even as towards what layer 2 means and what is a layer 2. And I think the approach we're taking at Scale is we're building a multi-blockchain network. So every application can have its own blockchain, and it's Ethereum native. And the goal is to have incredibly low transaction fees, low costs, and not give up on security. But at the end of the day, if we don't provide a very meaningful user experience, we're just not going to grow as an industry, and we're going to keep running into these bottlenecks. But I also think that there's a lack of understanding around the cost of centralization in layer 2. And it's something that I think we're going to solve the first problem, which is just high costs and poor user experience. And then I think centralization in layer 2 is going to become more pertinent, especially as authorities realize like, oh yeah, we should be KYCing everyone who's using this server to run a layer 2 effectively. So it's kind of driven one of our design methodology at Scale is, and we were actually building in 2017. The initial idea was, hey, maybe we should go build a decentralized exchange, and we designed not a sidechain scaling model, but a multi-blockchain scaling model that's native to Ethereum. And one, I guess, like in a way it is a sidechain, but it's very different. But the goal was, hey, how can we solve this without giving up on centralization? And I also just want to say, I think there's some amazing, there's a lot of smart people working in the space, and I think I'm excited to see how all the different ways of skinning the cat come together and which ones end up being successful in which categories. Hey, we've got to get fees lower, grow the user base, grow the market, and in general, pretty excited about not just Scale but other techniques as well.
So basically what you're saying is make the network more efficient in the meantime till ETH 2.0 kind of rolls around.
ETH 2, really, to Stani's point, like ETH 2 is actually, I think the vision is changing to say, let it be the security and settlement layer, and let's use layer 2 to have execution, or scalability layer if you're using not a biblical sense of what layer 2 means, but a, because there's also, I think, a lot of controversy on what's a layer 2 or what is a layer 1 or a layer 1.5. But yeah, I think in general, ETH 2 is going to help layer 2 or the execution layer be more effective.
Okay. Antonio, Stani, you guys want to add to that?
Yeah, I guess kind of getting back to your original question, I think that was a good introduction by Jack. But in terms of like, what do we need to solve right now with scalability? I mean, obviously the gas fee has talked about that. Like, who's going to use products where you have to pay $100 per action, basically? Nobody, or like close to nobody. But it doesn't stop there. I mean, like Jack was saying, I think just a really important thing that we haven't solved as an industry, like nobody solved this yet, is just making like a UX that's on par or ideally surpassing like that what's available on centralized exchanges, or call it centralized financial products more broadly. And I think with layer 2, we're starting to get to the point where that actually is possible. I mean, I'm excited about the product that we're building on DYDX. It's not just that. I think on layer 2s more broadly, it just unlocks a lot of new like primitives you can play with as a developer, basically. I mean, obviously it's lower gas fees, but it's also things like faster finality. Like on our new products, we can basically get like instant trading, feels like a centralized exchange. That's pretty awesome. You can kind of get away from the DeFi app. You submit the transaction and see a spinner on the app until your transaction mines for like a minute. It's things like being able to offer like higher leverage on our products because we can support better performing price oracles with the same amount of security. So it's just improving on like a bunch of different axes. It's not just, well, I'd say it's mostly scalability, but I think people don't realize like a lot of the second order things that scalability unlocks. And I think that can lead to just a much better product experience overall.
Okay.
Yeah.
Fair.
And to add to both Jack's and Antonio's point is that kind of like the scalability actually also offers interesting opportunities to build new products that could actually have certain element of the security and that you could actually then settle, let's say, into the layer 1. But for example, I could imagine in terms of like lending and borrowing protocols like AAVE. For us, what is interesting is that the interest rates fluctuate quite a lot, and they depend on the actually deposit asset. Most of the deposit assets are stable coins, so they're US dollar nominated, which practically means that they kind of have very relative the underlying fluctuation of the actual currency, but then the yield might fluctuate depending on what's the stable coin that you deposit into the protocol. And to actually swap your position, so let's say if you deposited USDC and you want to swap to DAI because there is a higher yield opportunity, doing that on layer 1 with smaller transactions is very painful because you kind of like lose the yield opportunity there. So you have to have enough large transaction to do that. And also if you want to do it frequently and kind of like trade those positions, in that case you kind of need something like DYDX where you can trade that exposure without kind of like incurring those high gas fees. But for example, like also it's a bigger question of like including like the user experience, but also like the inclusivity. When you can actually get transactions and when you can get deposits that are in the size of let's say $50, let's say $200 and below, you can actually increase the demographic of the user base that you have to much wider base. And that's like what's very interesting, because like if you look at what many of these protocols and networks are doing, we're pretty much bringing transparency and kind of like a global markets, global interest rate markets or liquidity markets, and they are accessible pretty much quite widely. And in that sense, like if you are able to provide this kind of functionality, being able to bring the cost down to participate in terms of like transaction cost brings more inclusivity. So let's say if you're holding now a DAI on the layer 1 and you transfer, let's say, a DAI to another person, your friend, and a DAI is practically a interest increasing stable coin. So the balance increases all the time. That's how it's programmed. So if you send it to your friend, it still continues to increase. And what's interesting here is that if you send it to layer 1, the transaction fees will eat the future increases there. But if you send it in let's say in Polygon layer 2, like the transaction cost will be a fraction of a cent, just for example. And I'm taking Polygon as an example because that was the first one, kind of like side chain we actually deployed the AAVE protocol recently. But it just shows like how much you can onboard new users as well.
Sure. And I guess you guys started name dropping different solutions, right? So I want to quickly share my screen. Okay. So this comes from Ethereum.org, their developer docs on a certain section of layer 2 scaling and solutions. Okay. So all these different types of layer 2 solutions from rollup, state channels, plasmas. This one I have a hard time. Validium, sidechains, hybrid solutions, like so many different types of solutions. Each, I'm assuming, I didn't dive into every single one of them. Each is trying to achieve relatively, give or take, the same thing, right? Improve the network, make it more efficient, more scalable, lower transaction gas fees. Excuse me. How do you guys kind of approach this? I know Stani and Antonio, you guys recently made announcements of you working, Stani, you with Polygon. Antonio, you guys working more with what is ZK rollups, right? Synthetics is moving more towards optimistic rollups, and same with Uniswap. Like, how do you guys approach what solution is right for you? Like, and like, why not go with a hybrid solution? Why choose the rollups, Antonio, and why Stani rely more on the plasma end of things and partnering with Matic? Like, how do you guys kind of approach that?
Yeah, I mean, I think there's trade-offs. There's no 100% right answer, right? It really depends on the application that you're building. I mean, I can kind of go through for us, and again, hopefully not getting into too much technical detail, but like the decision behind our going with Starkware and their technology there is zero knowledge rollups. For us, I think it came down to a few things. First of all, was kind of production readiness. Kind of like I was saying in my opening thing, like these are real problems for our users now. So it was like really important that we were able to solve them as soon as possible. And a lot of these solutions, you know, not to say everything across the board, but for like optimistic rollups, like other layer 1 chains, things like that, are close to being production ready, but they're like not quite there yet. Whereas for us and kind of our decision with Starkware, like they've been running on mainnets with a different decentralized exchange called Diversify for almost a year now. And that gave us a lot of confidence that they would be production ready, basically as soon as we were able to integrate. And that was basically the case. I mean, I think, yeah, I guess it's hard to address this without getting a little bit technical, but on our like zero knowledge rollups, basically the way that they work. And one reason we and a lot of people think that they're cool is they basically have like unlimited on-chain scalability. Because you can just take this like arbitrarily large set of data, and in our case, that's like all the trades you might want to execute on DYDX, run this basically magic math called a zero knowledge proof on them, and kind of translate them down into this constant size data object. And then you just put this constant size data object on the chain. And that's where the scalability comes from. Like, it doesn't matter if you have one trade in this batch or like a million, thing is still the same size. So that was like another reason we went with them. Like scalability like seems high. One of the things that people think about with rollup chains is the concept of like withdrawal times, which is also pretty important. Like on optimistic rollups, withdrawal times are like your funds are basically locked there for roughly a week or so. Whereas with zero knowledge rollups, it's kind of on the order of like single-digit hours. So that was another important factor in our decision. I mean, I could kind of go through like a bunch of different technical things, but like I said, I think there are trade-offs with every different approach, and it really depends on what the type of app you're trying to build is, and how you address those trade-offs.
Sure. Stani, how did you guys kind of see it from your perspective? Like, why did you decide to move with Matic? Why were their plasma solutions appropriate to where AAVE kind of wanted to go next, or temporarily for the meantime? Yeah.
Well, pretty much we look at the same reasons what Antonio practically mentioned, and many of the solutions at the moment they're not ready in kind of like very production environment in mainnet, and kind of like when you look at production environment, you are looking a bit of like track record and how the system has been functioning, and the theory is becoming proven. What's also like interesting for us is that the AAVE protocol relies quite a lot on composability and the communities that are kind of like built around the protocol itself. So usually the protocol is used to store collaterals, to borrow liquidity and take it elsewhere within an ecosystem, like for example in Ethereum. And Matic was an ecosystem which has been already on mainnet for quite a while, and there's some activity there. They have a vibrant NFT and gaming community, and one of our ecosystem projects, AAVE, decided to actually launch there. There are a couple of also like financial, like DeFi protocols that will actually launch directly from Matic, which is in their use case pretty good solution. So there will be some kind of like activity there, and there's going to be builders. So our goal is to empower different cultures, and there was obviously like a culture to empower in Matic. But at the end of the day, I think we think these are like, there's different kinds of trade-offs definitely, and I think our goal is to a bit have infrastructure everywhere where we can. But in some cases, you might not need something that we offer in some particular ecosystem. But yeah, it's pretty much about trade-offs and ecosystem.
Yeah, makes sense. Jack, when people are kind of coming to you for a scale network, right, this elastic blockchain, what are some questions you find them asking themselves to integrate with your platform? Like, how do they decide to go with you guys versus somebody else versus whatever it may be, right? Like, what are those questions that you find people asking themselves to kind of move them to the next step?
Yeah, I think one is, how natively do you want to be tied into the Ethereum network? That's one major thing. It's like, do you want to be in the ETH network, or are you ready to go to another place, right? That's one piece. And then the other piece is, how interoperable are you with EVM? And I think that is not actually limited to the ETH network anymore. I think we're seeing a lot of other chains adopt EVM and need Ethereum compatibility, Ethereum interoperability, and they are creating bridges that allow for almost a competitor to Ethereum to be able to provide similar connectable technology and connect back to ETH layer 1 and then go to another layer 1. And then there's another category of, well, hey, is this another blockchain, or is it actually a fraud proof, a verification checker, a game theory mechanism with timeout periods? And so these are the different questions people have to ask themselves when they say, hey, I've got to help my users. My users are paying hundreds of dollars a transaction. And Scale, kind of our approach is, hey, we have, it's a multi-blockchain network. So there's different validator operators. It's a different network, but actually the Ethereum network orchestrates where the Scale network, how it functions and which nodes were to operate on which chain. And so it's really driven and powered by the Ethereum network. So we're kind of this hybrid place of, it's not a pure L2 because there's other nodes, but the L1 is orchestrating where those other nodes operate. And then the question is, okay, should we implement rollup? Should we implement different, ZK or optimistic and scale chains? And we're kind of, right now saying, hey, like people are pretty comfortable. I think everyone knows that the same validator operators that run ETH2 and, Solana and Near and Avalanche and Polkadot, and Scale, they're all kind of running, the same proof of stake operators are operating across all these different platforms. And there's almost a pooled security model. So we're kind of thinking, hey, we're going to open up. And when people do need extra functions, like, could we partner with Starkware and let them, sell their verification checking software? as an interim step between a scale chain or other roll-up platforms. But right now, people, I think there's like religious battles on, is it Ethereum or not? And then there's other battles of like, just give me something that works. I'm going to Binance Smart Chain. And we're just trying to, I think say, hey, we can provide something decentralized. You can still be in the Ethereum family. You pay Ethereum to set up your chain. You pay Ethereum to stake, to buy a chain, et cetera, because of the hybrid nature of the networks. But it's, we're at a very interesting stage in terms of development of the space. And it's also a simplified perspective. People think one size fits all for Ethereum scaling. I think as the industry matures, you're going to find certain techniques and methodologies win in certain areas more than others. And that will settle over the course of the next 12 months. So
that comes to my next question. So there probably won't be that one dominant L2 solution. There's probably going to be a bunch that live in that abide to everybody's needs and requirements, right? Is that what you're kind of saying?
Yeah, that's what I'm kind of saying. And one of them is like, well, who runs the operator? Like what, if you're using a decentralized network, but if a company runs an operator, how does that fit for your business model? Or, hey, how close do you need to be tied to the Ethereum network? If another set of nodes are running consensus, is that going to hurt your, ability to get people to use your application or your exchange? And I think the other one is security. Like what guarantees do I want compared to centralization versus decentralization, right? For example, on Scale, you've got to trust the validators. There's 2 billion stake, but you've got to trust them. Whereas with a roll-up solution, it's designed to not have to trust anyone. You're trusting math, but then you're putting centralization and timeout periods and certain techniques or trust around a centralized operator and the fraud proofs that are there for that model. So it's really and both Antonio and Stani, I think, spoke to this. There's no silver bullet because these are blockchains. These are systems that rely on game theory and human, if Ethereum, layer one, if 51% of the operators decided they don't care about money anymore and wanted to throw away their basic human incentive structure, Ethereum would break. But that doesn't happen because people like money, right? They don't want to and so they're imperfect systems. And I think we are going to have a bit of a mixed bag in terms of results. And it'll be interesting to see the way network effects and power laws come into play as well.
So I guess, unless anybody has anything else to add to that, I want to go back to this question. I know, Jack, you mentioned this briefly, but all these layer 2 solutions, I'm going to bring him up again because there's a lot going on here, right? All these are meant to be temporary solutions until ETH 2.0 launches, correct? Or do you and if not, what do you see that world kind of transforming into? And I'd love to get Antonio's point of view as well. Stani, feel free to jump in.
I think I'll let the other guy, Antonio and Stani, weigh in on this. But I think the vision of ETH2 has been modified, and I think the goals have to be how do we have hundreds of millions of users being able to use the shared blockchain network at the same time? And if there's one settlement layer of one blockchain, you're just undoubtedly going to come into traffic jams. Okay, so you need a second layer or scalability layers helping and supporting. And I think, if you look at the model on even the communications of Vitalik and the researchers behind ETH2, there's really been a shift to ETH2 being this foundational component that tries to allow computation to happen in other places, and especially expensive computation, and with the goal of not minimizing security. But Antonio and Stani, please weigh in.
Yeah. I mean, I completely agree with that. I think the best way to think about it probably is that these are not stepping stones, they're multipliers. And they're multipliers basically of the scalability that you get with the given layer one. So if a given layer one can process like 15 transactions per second on layer one Ethereum, then you tack on like Starkware or tack on like optimistic rollups, and you multiply that by like 100 or so. Okay, now you get like 700 transactions per second. But what if like your layer one could process, I don't even know what the numbers are for ETH2 to be honest, but like, thousands of transactions per second, like 10,000 transactions per second ETH2 can do. Well, then you tack on that like 100x multiplier to that, and like, wow, like what do you know? You're at like millions of transactions per second. And I think that's the real goal. And I think that's what kind of Jack was alluding to in terms of how like the vision of ETH2 has changed to being like this settlement layer for everything with kind of these multipliers in terms of rollups on top.
Got you. So it all coexists. Go ahead, Stani.
Yeah, I agree. I think it's I vision in a similar way that also because like, you know, even if you have in the layer one more capacity to do transactions, the problem is that there will be more, again, demand for that computing and execution power, and that's kind of like it's an eternal issue when new innovation comes. So when you're applying that amount of security that we have in the layer one, what's going to be interesting is that you would like to use it only for batching large amount of state data into the layer one, and then taking care of the computation elsewhere, and being as efficient as possible. So I would imagine that Ethereum becoming more as a kind of like a base place to store the states, the very main data that you need to reconstruct for example, whatever solution you're using. And one of the things we kind of like don't focus is that, you know, if you have a system like a proof of stake where you can actually have a lot of transactions, what happens is that, you know, developers will start to innovate in a way that you assume that you can do a lot of transactions, and you start to create applications that push a lot of data in, and then practically you need more storage, and you have a bigger state than before. That is the kind of like an issue that we have. So you need to use blockchain very carefully, especially when it comes to the highest security. And I definitely agree what Jack and Antonio said about.
So, hey, Adam, I want to throw out a non-technical analogy, okay, just to kind of support, you know, try to bridge the technical gap. If there's anybody kind of wondering, like, what are, you know, what does this mean? So imagine, like, you know, you're hanging out with a group of people, a group of your buddies, and you're playing like poker, and, you know, at the beginning of the night, everyone kind of like puts some money in, and that's what they own. And then you're playing poker all night. At the end of the night, like everyone walks out, and then but you don't leave with the money. You're kind of like, okay, well, here's the settle. Here's who owed what at the end of the night. Here who owns what. And you come back the next week and play. Well, whoever had that ledger of who owns what, they can all come back and play again. And it's just stored, you know, but ETH2, it's stored by that one system, and that's the settlement. But all the gameplay, all that computation, every time like the deck goes through and the deal happens, that's all the like layer 2 and Ethereum scalability computation. But you want to trust this house to determine whose money is whose, because when you come back the next week and you were up, $100, and then they're like, oh, you're down 100. You're like, well, that's not right. So you need to have a lot of security and stability at that foundational perspective, so then you can have that computation happen.
That makes a lot of sense. That's super clear and to the point. And I think that's going to resonate with a lot of people, like the Blockchain and Booze audience. And the reason I keep these so general is I'd argue not everybody's super technical here, right? A lot of people want to learn about this stuff, want to learn how they participate. So that's a good point of view. I want to kind of discuss competing networks here, okay? We see a lot of activity on Binance Smart Chain. We see a lot of projects on Ethereum, like 1inch, Curve, et cetera, moving in, or not moving, but integrating with Polkadot. We're seeing Cardano, Near, the list goes on and on and on. How do you guys feel about this? Like, how do you feel about more chains picking up traction? Or is it just one of those things where like ETH is the only way to go? I know Scale, Jack, at Scale, you guys might have a little bit of a flexible opinion on this, but I'm kind of listening to Antonio and Stani here. Like, how do you guys feel about more chains outside of Ethereum, especially those that forked Ethereum gaining a lot of traction?
Yeah, I 100% don't care about like any religious or whatever like commitment to Ethereum. I'm just gonna like build the best product that we can, and I still think that that's a roll-up chain that rolls back up to Ethereum. And it's not just like like religious zealotry or whatever about like ETH heads and like wanting those people to use your product. That's like a very small like vocal minority. it's really things like, can you use all the wallets on Ethereum that everybody already has? Can you use all the ERC20 tokens that people already have on their chain? Stuff like that. Like, can you use all the developer tools that ETH offers? Like, whatever the thing is that ETH has an advantage in. And for us, like right now, the answer was still like building on a roll-up chain that rolls back up to ETH. I think in regards to just like this real, like everybody splitting up into like all their different chains, I think it's going to be interesting, to be honest. I don't really know what's going to happen. I feel like there's going to be a period, like this is just my personal hypothesis, but I feel like there's probably going to be a period of like, 18 to like 24 months or something like that, where everybody goes off and like builds their own thing. And then people kind of realize like, oh wait, we lost a lot of like what made DeFi cool and like the composability and stuff like that. And I'm not really the first person to say this. Like a lot of people, everybody always asks me about this. So like, what about composability on like layer 2? And I'm like, yeah, that's a real issue. I have kind of a counterculture view on this for DYDX, where like I think composability is actually less important for us than some other like applications on DeFi, because we're basically building synthetic. So like the only thing that we actually need is like one collateral asset, and then we can kind of create synthetically like any asset you might want to trade based off of that. And we take like a pretty full stack approach to building products. Whereas like I don't know, like a Uniswap or like a Compound or something like that, like derives a lot of value from the things that are built on top of them. So it's important to have that composability. And yeah, I don't know, I guess I'm kind of rambling, but like, I don't know what's going to happen, but I feel like people are going to have this like a realization that like composability was important for a lot of these projects. And then we'll kind of like re-centralize on like a specific chain or 2 or 3.
So basically, it will mean that the flash loan activity will go from DYDX to.
Yeah, we're gonna keep our lending protocol on layer 1 for that reason. But yeah, basically.
but yeah, my approach, I agree that it really depends on also kind of like in the of the product. So for us, like the composability is quite important, because we have this kind of like a base layer lending protocol, which we see that most of the liquidity is just borrowed out to some other particular use case, and it's very programmable that we see. So most of the activity doesn't even come from the actual user interface that we have built with the web. But what's interesting for there is that we definitely see like the composability in our product very important, but that's not the case everywhere. And I think you lose composability when you go to layer 2s, but you usually gain something more. And it doesn't mean that actually you lose completely. I mean, there's always like you can keep some of the liquidity and in the main layer and the rollups and kind of like transfer between different networks. And I guess like the future of like composability is about like also liquidity management. So before you do transactions, you kind of like check balances on different chains and how much you can move and what will be the times to withdraw and that kind of periods involved there. So I think liquidity will still need to move between different networks. And I think the composability is still important, but it depends on the product.
Yeah. Jack, how do you guys see that at scale? I know you guys have, like I said, a more flexible point of view, but how do you guys feel about more of these other networks gaining a lot of traction, users, because Ethereum's high gas fees and just in general, the experience on there is not the most pleasant, I guess, for crypto native people, and especially for those entering the space?
Yeah, I would say the Scale team, where most of us are ETH quasi-maximalists, in the sense that we have a huge bet on the Ethereum ecosystem, and Ethereum actually runs the Scale network, right? You can't get a Scale chain without paying Ethereum gas fees to have your chain orchestrated and managed, right? All the stake on the Scale network is on Ethereum. So they're kind of tied at the hip, but I think it's very clear that the tooling and the developer ecosystem is just booming in the Ethereum world. And then I think, Antonio had a good point that this religiosity around what the construct of what Ethereum is will probably grow. And I actually think that it will make Ethereum more valuable itself. The more Ethereum permeates everything, even if settlement and consensus doesn't always happen on Ethereum. And in the short term, it might hurt a little bit to see all of this action happening on Binance Smart Chain. But guess what? Ethereum's running over there. And the Ethereum tooling's running over there. And over time, that just grows and grows the total addressable market. And developers pick winners. And I think the developers in general are, you go to an ETH hackathon and you don't just see a lot of people, but you see passion. And I remember, seeing Stani and all the crew there at all these ETH hackathons forever during the winter market. And, you look at every single one of those companies that was sponsoring these ETH hackathons, and a lot of the people competing, these companies are worth, or not companies, but projects and organizations, networks, these tokens are worth billions of dollars. And, it all happened through this kind of passionate community. So, I think we're going to get somewhere good. But Ethereum as an ecosystem and as a developer interface will help drive that.
Stani, I see you smiling when he mentioned the hackathons. I feel like it sparked a memory of some sort. care to share what's on your mind, and you want to add anything to that?
I think no, there's a lot of memories in hackathons, but I think kind of like one of the things why Ethereum has been and decentralized finance has been quite successful is because of like things are moving in the network. So kind of like that you might be able to get yield on one place and quickly trade in another place, and this movability is quite important. Not necessarily like interoperability, like things that need to be in sync. That's what interoperability also is. But the thing is that if you're onboarded in the Ethereum network, like how easy it's to move between different networks and consume different applications. So that's kind of like one important thing. And so there's different levels of interoperability, I would say. And I think this kind of like religious thing, I also see, there's like a lot of support in some particular, like I would say like communities, but a lot of the technology even there that is very good isn't being kind of like yet even deployed. So I mean, for example, like there is interesting stuff that is happening now in the ZK ecosystem, but I think we're not yet near exploring like what it can be in the future and how it will evolve. And I think like what Jack is doing at Scale, for example, that's good another example. So like we're still very early on like how the scalability will play out, but definitely we'll see like kind of like that we see now as an issue that there's just like too many people at the moment executing in layer one, and it's definitely an issue. I'm rambling again, but
no. This is all good stuff. And again, the reason why I asked this question is because I try to help a lot of my friends and a lot of my family and onboard them into Ethereum, onboard them into crypto, show them how to open their MetaMask and the whole spiel that comes with that. And I have a friend, she's a musical artist. She has nothing to do with finance, nothing to do with crypto. And she's a musician, a singer. She's been doing it for years. She just had her first NFT drop right now. Shout out to Queen George. But the whole takeaway is like she makes her money by the whole starving artist thing, right? She babysits. She works with different PR agencies, and she's always had to find a way to kind of make money on the side. And I introduced her to yield farming. I'm like, check out this thing, and you can make money. You can contribute to a network. You got to manage it every now and then. Check for different rates and move your money from this pool to that pool. And I told her, like, look, you don't have that much money to invest in this stuff, right? You don't have hundreds of thousands or millions of dollars to play around with the Ethereum network. Check out Binance Smart Chain, right? It's a fork of Ethereum. They have beefy finance and all the stuff that comes with that. And she's literally yield farming on Binance Smart Chain and making money right now to pay for her production team, and it's just a more viable solution than using Ethereum, because the money that she would have made to pay off the production team would have been taken away through a gas fee, right? So it doesn't make sense. And that's why I bring up that question, because it's interesting to see all these other chains and kind of pick up traction, especially now when we're seeing more and more people come into crypto through NFTs, learning more about DeFi. We're seeing more traditional institutions like Visa leveraging Ethereum, and you're just hearing about crypto more and more and more every single day than you were 3, 4, 5 years ago. So that's the only reason why I bring it up, because it's interesting to hear from your guys' perspective on what that kind of might look like, or what that market share kind of might outplay to. We only have a few more minutes left. I want to kind of jump into QA and ask some of my last final questions. I guess we'll start with this because there's a QA question that pertains to it. So how do you guys kind of envision CeFi's transition into DeFi? I know, Stani, you have some experience with this. I see you posting on LinkedIn every now and then. Like, where are we right now with that?
I can quickly maybe say that I see that there will be a kind of like a CeFi layer, because like not everyone will want to necessarily like participate directly into decentralized finance, even if it's on layer 2. So I would say kind of like there will be still quite big crowd in the future that kind of like wants the service of custody, and then those like custodian and centralized services will just operate in bulk. And I see kind of like this is the progression where we are going with CeFi and DeFi thinking.
Antonio, Jack, you guys want to take this one? I'd love to hear your
That's
kind of
right.
point of views. Yeah.
I think it'll be like really big moments for a lot of different DeFi protocols when we get more just like integrations into, call it like the funds that are custodied through centralized exchanges interacting directly with those protocols. I think a lot of them are looking into it. I mean, we've had a lot of different conversations with different centralized exchanges. I think they're not like quite there yet. But a lot of them are very interested, and a lot of people see the writing on the wall in terms of how things are moving more towards DeFi over time. I mean, I guess just take exchange as a use case, but currently DeFi is like, I don't know, like 5 or 10% of the total trade volume on crypto, but it was like 0% like 2 or 3 years ago. So it's growing really fast, and I think people can see the writing on the wall, and exchanges can see that their users will want to be able to interact with a lot of these awesome like lending, like derivatives, like whatever protocols that are being built, and they want to give their users access to that.
Yeah, I'll add to that and just say I think it reminds me of when Web 2 was taking out these brick and mortar establishments where like, well, why do I need to, if you buy something at the store, it costs so much more because I have to buy real estate and they have all these people working there. And in finance, there's almost like an even heavier tax because they have bigger, more beautiful buildings, and people, they pay more, and so the smart CeFi businesses are actually going to start figuring out how to inject themselves into DeFi. And hey, it's not going to be like an overnight thing where DeFi takes out CeFi, but it's going to start growing market share in very specific categories, and actually DeFi will improve as CeFi starts kind of hybriding into it to even like give synthetic liquidity and make the UX better for layer 2. There's interesting stuff happening there too.
Yeah, and this ties into a question that comes from the audience, and this is coming in from Remo. Is there any concern that regulated institutions and fiduciaries cannot touch current DeFi, and there will be an institutional solution that replicates DeFi for more in other institutions?
I would say yes, as soon as they give up their desire to make profit and have nice buildings.
I mean, like that's like as soon as they ditch their core line of business, give or take, right? That's a great answer. Antonio?
I would say maybe in the medium term, but I think it's kind of irrelevant in the long term, because like the thing that's actually really important in finance is the concept of liquidity. Like everybody wants to be trading where everybody else is trading. And if you can truly build a permissionless, insert whatever the product is, permissionless, like lending protocol, permissionless spot trading, permissionless derivatives trading, and everybody truly has access to that. And it's truly every bit, from a product perspective, as good as, call it a centralized product, which, we've been talking about, not quite there yet, but pretty close. Like, why would everybody not just use the thing that has more liquidity and the thing that everybody else is using? And I think that that's like the real reason as to why like DeFi will win in the long term, because it's permissionless and because that actually makes it a better product.
Very cool. Stani?
Yeah, I think one of the success for DeFi is that, the permissionless nature means that you can permissionlessly like build things. So anyone can just enter and bring an algorithm and that algorithm gets, if it's a good algorithm, it gets matched with liquidity. And this kind of like a usually algorithms are like something efficient or something that made possible what was previously very, very difficult to achieve. And this kind of like creates a wave of new liquidity, because liquidity is moving from one place to another. There's arbitrage, and there is opportunity for new liquidity to come. And what happens here is that you have this like a constant market of innovation where developers, builders, like globally are accessing this environment where they can just build things, and by building something very interesting and efficient, they get a lot of network effects this way, and they get this access of pool of capital. And because the rate of innovation is very high here, everything is public that we build. All the code is pretty much like open source. So you can look what AAVE has built, what let's say DYDX has built, and just like improve those formulas. And then pretty much what we're doing, we are looking what others are building and then improving from there. So it's this kind of like a constant innovation. And networks are also like community governed. So there's usually like a governance token mechanisms. So pretty much it's an open way to contribute into those protocols. And actually compared to, for example, what you could contribute in the traditional finance, and especially because in open environment and community-owned projects, where code base is open source, you kind of need to always like listen to the end users very carefully and listen to the minority of the stakeholders very carefully, because there's always a kind of like a risk that you might have like this fraction where the protocol gets forked and there's new opportunity for early adopters to create something kind of like a different there. And so it's like a risk, but it's also a good thing at the same time. And this thread creates this kind of like a feedback loop where you try to do things very well all the time, and everyone is incentivized to do that. And it doesn't work in the traditional finance because you can't fork like JPM, or you can't fork the Wall Street quite easily because of multiple reasons. And I think like this kind of like open system is something that just keeps on innovating and becomes so efficient that it's very difficult to create something parallel and kind of like more institutional friendly in the sense that it supports more, let's say, the legacy finance. It's just very hard. It's easier to just join those protocols because these protocols are just one piece of like tech stack in something that institutions could have in their offering for a wider audience that they already have. So I guess like I would say that DeFi is the winning thing here.
So DeFi is the winning thing. I agree. I 100% agree with what you said. But what's the end goal of DeFi? Like what are we trying to reach here, right? We can't fork JPM. We're continuously innovating. We're trying to create a tech stack that plugs into the rest of the financial world, right? And I don't want to hear the answer of like to bank the unbanked. That's the very like traditional answer. But like what comes after that, right? Well, what's the end goal here? And take a minute. I know it's a big question. It's like someone's trying to yield farm, other person's trying to scam. Like everyone's trying to do their own thing, right? Print new money, launch new projects. Like, but what's the end goal here?
Well, this is where like for us, like composability is the key thing. Kind of like once you solve DeFi, like the finance, which is like infrastructure and Web3 technologies, you can solve a lot of other things. You can empower a lot of things. For us, it might mean that we can actually finance other economies that are entering into the space, greater economy, or just people working for protocols. For like derivatives, it might be that you can hedge risks that you can hedge before efficiently. I mean, like it's pretty much about empowerment. And once we build like everything we need to build, we can just stop and drink more booze together. That might happen someday.
I'm down. I'm in.
Hey, I mean, by the way, cheers to that.
Cheers to that. Bring out your substance, Stani.
but hey, I think the power of these systems goes beyond DeFi, and DeFi is like kind of the golden child right now of the Web3 broader era. But you look at decentralized social networks, you look at marketplace disruption, you look at B2B disruption and like SMB and all these different categories, gaming. And I think it's just a democratization of business. And people like, it's easy to get really complicated about this stuff, but you're just democratizing and like federating who makes decisions and who gets profit and who has governance control over all the tools we use and where our money goes. And you know what, when like profit sharing gets more equitable towards like workers, users, and like participants, and why not do that compared to other things? Right now, there's clearly friction, but there's upside. And so the upside bootstraps the network effects to get around the friction. But we're going to see these values permeate across DeFi and other areas. And that's the goal of DeFi, I think, is to democratize finance.
Amazing. Antonio, anything to add to that?
Yeah. So I'm going to betray my Coinbase roots and rip off their mission statement, which I think is actually really good. Coinbase's mission statement is to build an open financial system for the world. And I think that's kind of what Jack was getting at as well. And I think they were right. I think they're going about it the wrong way. I mean, they're building a centralized exchange. So how open is their financial system? Which is why, you move on to things like Uniswap and DYDX and AAVE and all of that. But I think the goal is really big, even just with DeFi, right? I mean, think about like the financial system. It's the most permissioned, most globally isolated, most trusting like system in the world, basically. And we have this chance to basically build something entirely parallel with this new financial system we're all building together in DeFi. And it like looks like a toy right now. I mean, it's like starting to become like a little bit more mainstream. I like to think like DYDX is pushing that forward a little bit into more advanced financial products, but we're like 1% of the way there. But just think like, if you kind of like what I was saying before in terms of like why I think like liquidity will be like the main reason why everybody actually uses DeFi in the long term. Like, what if we get to the point, and I think we actually almost definitely will get to the point, where it's more profitable to use DeFi than it is to like use other platforms, because there's more liquidity, there's better interest rates on Aave, there's like whatever. And that will be like the real watershed moments, I think, for like when everybody like is starting to come and use DeFi. I mean, we're already starting to see it with like some of the liquidity mining and yield farming stuff. I think that's a little bit temporary. Like a lot of this stuff is just based on, not all of it, but like a lot of it is just based on like, hype and things like that. But I think there is something real going on there. And once we can build this global liquidity system and have this open financial system for the world, that's going to be game changing. And we're like 1% of the way there. So I'm excited to continue building towards that.
Amazing. One last question before we wrap it up. So we had DeFi summer. That was a blast. We're going through NFT. What are we? Spring, right? Is that what we're doing right now? NFT spring. We're seeing a lot of traction. What's that?
No seasons, quarantine time.
Yeah, NFT quarantine season. All right. Stani, you're accumulating NFTs. Jack, I don't know. Antonio, I don't know if you guys are buying NFTs, but what's next? Like, what's that next thing that you guys see picking up a lot of traction? Social tokens, I hear that's like the next thing that people are getting excited about. What do you guys think?
Yeah, I think ownership economy. I feel like ownership economy is clearly going to step up as like a really, amazing use case for decentralization. And, because I think back to like, I think it's a long lesson. If you worked in crypto, like, why should it be on a blockchain? And I think the next, clear answer to that is, okay, like when you're disrupting middleman heavy businesses and give ownership back to users. And that's, in a way, DeFi is ownership economy in itself of crypto assets and systems. But that's my feeling. It's kind of this whole Web3 ownership economy movement. But a lot of that is, to be honest, it's incredibly gated by poor user experience. So the scalability solutions we see coming are going to help drive that forward. And it's not going to outshine DeFi. I think DeFi is on a trajectory that's not stopping, but there'll be other categories that start popping up as they should, based off the values. Cool.
Antonio?
I don't have too much to add to that. I guess I'm pretty focused on just like making DeFi happen. And like I said, I think there's a long way to go there still. I think NFTs are cool. I guess I'm more of a like CryptoKitties OG. Still have a bunch of CryptoKitties, so I'm hoping those will go back up. But I think the design space for blockchains and decentralized applications more broadly will open up quite a lot with more scalability solutions. So I'm excited to see what comes next.
And Stani, what's coming next, man?
I don't know.
Predict, man. I need you to predict something. What is coming? What's coming next, man? I need a little bit more from you. Okay, so the only reason I'm pushing this is because like I'm very excited about social tokens. I've been seeing more TikTok videos go viral on social tokens. And that's kind of like a lot of the start. I know Misari just published something as well on social tokens. And when they did that early on, and if like the NFT cycle started bubbling up, probably not directly correlated to them, but the next thing I see on the horizon is social tokens, right? Would you agree? Would you disagree? Would you say something else might kind of intervene?
I think like they definitely have like kind of like an interesting like place in the whole ecosystem. I think pretty much everything becomes like financial if you think about it, because when you have like something like blockchain, you can store value. It's immutable. That kind of like value preservation, the provenance starts to like accumulate. Maybe like social tokens is just part if you want to like put that value on yourself, like as a person or whatever you're doing. I personally will try to avoid, because I know kind of like tokens, they move with the markets up and down, and I've been like the hell of bear market, and and you get a lot of people kind of like expecting a lot of things, and then when you have bull market, people are like thanking you even for like kind of like the success, and I think that's not like very cool behavior. But what I'm actually betting quite a lot is to see more like metaverses. Like that's what I like in NFTs, and also whatever is happening. Like in one way, like if you think about Ethereum or like IPFS, it's just like a big metaverse, and you can connect things and augment them, whichever place venue you want to do that. So that is something I'm kind of like betting quite big and want to see. And blockchain is pretty cool because it's a registry of things and storing state and values. So I would say that metaverse is very, very cool. And maybe someone could create a game where CryptoKitties and CryptoCorgis could do battle royale. So that's just an example how
I would love to see that.
Yeah, hey Adam, I think some of like people need to you always have to ask yourself, does a blockchain add value to what I'm buying? And if the answer is no, then don't buy it. Okay. There's probably some social token. There are some social tokens where it makes sense because of the game theory and the scarcity elements and like the participation. And there's other times you're like, okay, like you're kind of it's a bull run thing. Okay. And
all right. You heard it here, guys. It's a bull run thing.
No, not all of it. Be careful. There's good and bad, and just be discerning.
Sure. No, I'm very excited about social tokens. I'm also I'm curious to see how the metaverse kind of intertwines and rolls out. Antonio, you keep building DeFi. You keep doing your thing. And Jack, cheers to you, bro. Guys, thank you so much for being on. One last cheers. Stani, hopefully one day I'll get you on with an actual drink. Otherwise, the transparent substance will do. And again, thank you, guys. Next week we have a really cool panel coming up. I got Greg Mike. I have Render and Whale Shark all joining the Boozer Tank, and we're talking about NFTs and all that good stuff. So cheers one last time. We'll see you all next week. And thank you so much. And if you guys want to join the networking now, which I highly, highly recommend, it's a lot of fun. Everybody that's kind of watching live now congregates into meet.blockchainbooze.io. And from there, you can meet literally anyone and everyone that's been drinking, getting wasted and enjoying the live show. So go there. Go to meet.blockchainbooze.io. Antonio, Jack, I still see you guys in the waiting room. So if you guys want to join, I know the speakers or the attendees would love to hear from you if you have some time. Obviously, I respect that. but it would be cool to take a shot with you as well. I know the audience would love to see that. So meet.blockchainbooze.io, meet.blockchainbooze.io. Go there or be square. Guys, thank you so much, and we'll see you next week.